Picture this. You're watching the gold chart and suddenly, boom, a massive green candle shoots up like a rocket. Not a gradual climb, not a slow grind higher. A violent, explosive move that makes your heart skip a beat. The kind of candle that screams one thing: whales are buying. Big money is moving. And when big money moves in gold, it's not because they're bored. It's because they know something you don't. So what just happened? Why are institutional players suddenly piling into gold with such urgency? And more importantly, what does this mean for your wealth, your retirement, and the dollars sitting in your bank account right now? Let me walk you through exactly what's happening behind the scenes, because this isn't just another price spike. This is a signal, a warning, a flashing red light that the smart money has already seen and acted on. And if you're not paying attention, you're going to be left holding the bag when the real move happens. First, let's talk about what a green candle actually means in the context of gold. When you see a massive green candle on a price chart, it represents a surge in buying pressure within a specific time frame. It could be an hour, a day, or even just minutes. But the size of the candle tells you everything. A small candle? That's retail investors dipping their toes in. A massive candle? That's institutional money, hedge funds, sovereign wealth funds, central banks, moving billions of dollars into position. These aren't mom-and-pop investors buying a few ounces. These are the players who move markets. And when they move fast. Now, why would whales suddenly rush into gold? Let's start with the obvious: fear. But not the kind of fear you see on the evening news. This is calculated fear, strategic fear, the kind of fear that comes from looking at the data, running the numbers, and realizing that the financial system is sitting on a powder keg. These institutions have access to information you and I don't. They have teams of analysts, economists, and strategists whose entire job is to predict where the market is headed. And right now, they're betting big on gold. One of the biggest drivers behind this whale buying is the dollar. For decades, the US dollar has been the world's reserve currency. It's been the safe haven, the benchmark, the currency that everyone trusts. But that trust is eroding. Fast. Countries around the world are starting to question whether the dollar is as stable as it once was. And when you have a currency that's been printed into oblivion, trillions of dollars created out of thin air to fund stimulus packages, bailouts, and government spending, you start to see cracks in the foundation. Think about it. The Federal Reserve has expanded its balance sheet to levels that would have been unthinkable just a few years ago. We're talking about trillions of dollars injected into the economy. And every time they print more money, the value of the dollars you're holding goes down. It's basic economics. More supply, same demand, lower value. But here's the kicker. The people who understand this aren't sitting around waiting for the dollar to collapse. They're moving their wealth into assets that can't be printed. Assets like gold. And it's not just the Fed. Central banks around the world are doing the same thing. China, Russia, India, Turkey. They're all buying gold at record levels. In fact, central bank gold purchases have been at multi-decade highs. Why? Because they see what's coming. They see the dollar losing its grip as the world's reserve currency. They see the rise of alternative systems like BRICS, which is actively working to create a new financial order that doesn't rely on the dollar. And they're positioning themselves accordingly. But let's zoom in on what's happening right now, in this moment. With this massive green candle, when you see a move like this, it's not random. It's coordinated. It's deliberate. Somewhere, a decision was made to deploy massive capital into gold. And that decision was based on something. Maybe it was a piece of economic data that hasn't been made public yet. Maybe it was a geopolitical event that's about to unfold. Or maybe it was simply the realization that gold is undervalued relative to where it's headed. Here's what we know. Gold has been in a consolidation phase for months. It's been building a base, coiling like a spring, waiting for the right catalyst to explode higher. And when you see a massive green candle like this, it's often the beginning of a much larger move. It's the whales getting in before the crowd realizes what's happening. Because once the crowd catches on, the price is already gone. You're chasing. You're buying at the top. But the whales? They're already sitting on gains. Let me give you a historical parallel. Go back to 2008. The financial crisis was unfolding, and most people were panicking about their stock portfolios. But while everyone was focused on the stock market, gold was quietly making a massive move. It went from around $800 an ounce in 2008 to over $1,900 by 2011. That's more than a double in just 3 years. And who was buying during the panic? The whales, the institutions, the smart money. They saw the crisis as an opportunity, not a disaster, and they positioned themselves accordingly. Now, fast forward to today. We're not in a financial crisis, yet. But the warning signs are everywhere. You've got inflation that's still stubbornly high, despite what the official numbers say. You've got a banking system that's fragile, with regional banks collapsing and being bailed out behind the scenes. You've got geopolitical tensions that are escalating, from the Middle East to Eastern Europe to the South China Sea. And you've got a debt crisis that's spiraling out of control, with the U.S. national debt now exceeding $35 trillion. That's trillion with a T. So, when you see a massive green candle in gold, you have to ask yourself, what do the whales know that I don't? What are they seeing that's making them move billions of dollars into this asset right now? And the answer is simple. They're seeing the same thing that happened in 2008, but on a much larger scale. They're seeing a system that's overextended, over-leveraged, and running on borrowed time. And they're getting out of paper assets and into hard assets before the music stops. But here's where it gets really interesting. Gold isn't just a hedge against inflation or a safe haven during crises. It's also a play on the future of money itself. We're living in a time when the entire concept of money is being redefined. You've got central banks exploring digital currencies. You've got cryptocurrencies challenging the traditional financial system. And you've got a growing movement toward decentralization and sound money principles. In this environment, gold isn't just a relic of the past. It's a bridge to the future. It's the one asset that has stood the test of time, that has been recognized as money for thousands of years, and that can't be manipulated or devalued by a central authority. And the whales know this. They're not buying gold because they're nostalgic. They're buying it because they understand that in a world where trust in fiat currencies is eroding, gold is the ultimate form of money. It's liquid, it's portable, it's divisible, and it's universally recognized. You can take a gold coin to any country in the world, and it will have value. Try doing that with a dollar bill in a few years and see what happens. Now, let's talk about the mechanics of what's happening in the gold market right now. When you see a massive green candle, it's not just about the spot price of gold. It's about what's happening in the futures market, the options market, and the physical market. These are all interconnected, and they all tell a story. In the futures market, you've got traders betting on where gold is headed. And when you see a surge in open interest, meaning more contracts are being opened, it's a sign that big players are positioning for a move. In the options market, you've got traders buying calls, betting that gold is going higher. And in the physical market, you've got buyers scrambling to get their hands on actual gold bars and coins because they know that paper gold is not the same as the real thing. And here's the thing. The physical market is tight, really tight. Dealers are reporting delays in delivery. Premiums on physical gold are rising, and central banks are buying up every ounce they can get their hands on. This is not a market that's oversupplied. This is a market that's on the verge of a squeeze. And when you have a tight physical market combined with massive buying pressure from institutions, you get explosive moves. You get green candles that make your jaw drop. But let's bring this back to you. What does this mean for your wealth? What does it mean for your retirement? What does it mean for the dollars you've worked so hard to save? Here's the reality. If you're sitting in cash, you're losing purchasing power every single day. Inflation is eating away at your savings, even if you don't see it in the official numbers. And if you're sitting in stocks or bonds, you're exposed to a market that's overvalued and vulnerable to a correction. But if you're in gold, you're in an asset that's moving in the opposite direction. You're in an asset that's gaining value as everything else loses it. And here's where I want to pause for a second, because this is important. If you're sitting on $100,000 or more in retirement accounts, 401ks, IRAs, whatever, you need to understand that there's a way to protect that wealth without taking a tax hit. It's called a gold IRA, and it allows you to hold physical gold inside your retirement account. I put together a free guide that walks you through exactly how it works, how to set it up, and what you need to know. It's in the description below. No sales pitch, just information. Because if you're serious about protecting your wealth, this is something you need to understand. All right, back to the whales. Let's talk about who these players are and why their moves matter so much. When we talk about whales in the gold market, we're talking about a few key groups. First, you've got central banks. These are the biggest players in the game, and they've been accumulating gold at a pace we haven't seen in decades. China, Russia, India, Turkey, they're all buying. And they're not buying a few tons here and there. They're buying hundreds of tons. In some cases, thousands of tons. Why? Because they're diversifying away from the dollar. They're building reserves that can't be frozen or sanctioned. They're preparing for a world where the dollar is no longer the dominant currency. Then you've got sovereign wealth funds. These are massive investment funds controlled by governments, and they manage trillions of dollars in assets. When a sovereign wealth fund decides to allocate even a small percentage of its portfolio to gold, that's billions of dollars moving into the market. And they're not doing this on a whim. They're doing it because their analysts have run the numbers and concluded that gold is undervalued relative to the risks in the financial system. Next, you've got hedge funds. These are the traders who are constantly looking for the next big move, the next asymmetric bet. And right now, many of them are betting on gold. They're buying futures, they're buying options, and in some cases, they're even buying physical gold. Because they see the same thing the central banks see, a system that's overextended and a currency that's losing value. And finally, you've got family offices and ultra-high net worth individuals. These are the people who have so much wealth that they can afford to think long-term. They're not worried about the next quarter or the next year. They're worried about the next decade, and they're positioning their portfolios accordingly. They're buying gold because they understand that wealth preservation is more important than wealth accumulation when the system is unstable. So when you see a massive green candle in gold, you're seeing the collective action of all these players. You're seeing billions of dollars moving into position, and you're seeing a signal that something big is about to happen. Now, let's talk about the technical side of this move. If you look at the gold chart, you'll see that this green candle didn't happen in isolation. It happened at a key level. Maybe it broke through a resistance level that's been holding gold back for months. Maybe it confirmed a bullish pattern that's been forming. Or maybe it triggered a wave of stop-loss orders from traders who were betting against gold. Whatever the case, this move is significant from a technical perspective. It's the kind of move that changes the narrative. It's the kind of move that gets traders and investors to sit up and pay attention. And here's the thing about technical analysis. It's not just about lines on a chart. It's about psychology. It's about understanding how traders think and how they react to price movements. When you see a massive green candle, it creates a sense of urgency. It creates FOMO, fear of missing out. Traders who were sitting on the sidelines suddenly feel like they need to get in before the price runs away from them. And that creates even more buying pressure, which pushes the price even higher. It's a self-reinforcing cycle. But let's not forget the fundamentals. Because at the end of the day, gold is moving higher for a reason. It's not just technical. It's not just sentiment. It's fundamentals. And the fundamentals for gold right now are as strong as they've ever been. You've got negative real interest rates, meaning that after you account for inflation, you're losing money by holding cash. You've got a dollar that's losing value relative to other currencies and relative to hard assets. You've got geopolitical tensions that are creating uncertainty and driving demand for safe haven assets. And you've got a supply-demand imbalance with demand from central banks and investors far outpacing new supply from mining. Let me give you another historical example. Go back to the 1970s. The U.S. was dealing with stagflation, high inflation, low growth, and a currency crisis. The dollar was losing value, and people were losing faith in the system. And what happened to gold? It went from $35 an ounce in 1971 to over $800 by 1980. That's more than a 20x increase in less than a decade. And the people who bought gold early in that cycle, the people who saw the warning signs and acted, they preserved their wealth while everyone else got crushed. Now, I'm not saying we're going to see a 20x increase in gold from here, But I am saying that the conditions today are eerily similar to the conditions in the 1970s. You've got a currency that's being debased. You've got inflation that's eroding purchasing power. You've got a government that's spending money it doesn't have. And you've got a financial system that's built on a foundation of debt and leverage. In that environment, gold is not just a good investment, it's a necessity. And here's the kicker. Most people don't realize this until it's too late. They wait until gold has already doubled or tripled before they start paying attention. They wait until the crisis is in full swing before they start looking for a safe haven. But by then, the price is already gone. The whales have already made their move, and the average investor is left chasing, buying at the top, and wondering why they didn't act sooner. So what should you do? First, understand that this green candle is not the end of the move. It's the beginning. It's the signal that the whales are positioning for something bigger. And if you're not in gold yet, now is the time to start thinking about it. Not next month, not next year, now. Because the longer you wait, the more expensive it's going to get. Second, don't just buy paper gold. Don't just buy an ETF or a futures contract. Buy physical gold. Buy bars, buy coins, buy something you can hold in your hand. Because when the system gets shaky, paper promises don't mean much. But physical gold? That's real. That's tangible. That's something you can rely on. Third, think long-term. Gold is not a get-rich-quick scheme. It's not a trade. It's a wealth preservation strategy. It's insurance against the collapse of the fiat currency system. And if you approach it with that mindset, you'll be in a much better position than the people who are trying to time the market and make a quick buck. And finally, educate yourself. Understand what's happening in the world. Understand the forces that are driving gold higher. Understand the risks in the financial system. Because the more you know, the better decisions you'll make. And the better decisions you make, the more wealth you'll preserve. Let me leave you with this. The whales are buying gold for a reason. They're not doing it because they're scared. They're doing it because they're smart. They see what's coming, and they're positioning themselves accordingly. The question is, are you going to follow their lead? Or are you going to wait until it's too late? This green candle is a wake-up call. It's a signal that the smart money is moving. And if you're paying attention, you'll move too. Because when the next crisis hits, and it will hit, the people who are in gold will be the ones who come out on top. The people who waited, they'll be the ones wondering what happened to their wealth. So take this seriously. Look at the chart. Look at the fundamentals. Look at what the whales are doing, and ask yourself, am I positioned for what's coming? Because the time to act is now. Not tomorrow. Not next week. Now. The green candle has spoken. The whales are buying. And if you're smart, you'll be buying too.